Hi guys, I hope that you're doing okay. Um, this week I'm going to do actually two videos on the euro dollar. One is going to be with Fibonacci's, which we're doing right now. I've been following a training about Fibonacci's and corrective wave and trade strategy from that. So maybe we'll find it helpful in our trading. So anyway, to keep it very short, what I did is I have drawn a Fibonacci retracement from the high here to the previous low, or the low that we had at the beginning of the month, and did of course a Fibonacci retracement. Usually the theory behind that is that a retracement could go to the 50% line, 61% line, and the maximum would be 78%. Of course, it can go as high as 100%, but that's not the point for today. So, of course, from the big drop that we've had since last May, if the retracement goes to the 50%, it will still be considered a retracement, but it's quite high as far as the price is concerned. Also, correction move into wave pattern, corrective wave pattern, which usually are ABC wave pattern. Could be a bit more, but let's keep it at ABC right now. And what I was interested into looking is that if this price move up here is a correction, which has the characteristic of a correction because it's very sort of volatile. Then maybe we can look at it from this last impulse in the market. Interestingly enough, the point C here, we can actually predict in advance where that point C is going to be. So in green, I did a Fibonacci from that last wave pattern, and basically draw the 50, 70, 61, 78, and 100%, and we can see that the price has retraced from that wave to the 78.6%. Also, it is the point where the C will be. So from the wave A here to the wave B, we can actually determine where could be the point C potentially by doing a 100% Fibonacci retracement from the wave A here, right here, 100%. Let's put it correctly. Actually, it's correctly like that. And by taking this and applying to the low of B, it should give us the objective of C, which actually is exactly where it is now. So it appears that this high here was a C point correction, which basically says that, or we would hope that the market would potentially go back down and could break the B level here, which would confirm the C point, and resume its downtrend. So, of course, as far as trade strategy from there, we have to determine what will be the best one, and obviously, looking at that level of B, the B breakdown would be on the daily chart would probably be a good start for that. But anyway, the next video we'll talk about trendragon, and maybe give us a bit more precise entry openings. Okay, I hope that you find that interesting. Let me know what you think, and we'll go from there.
Okay, so this is the weekly chart for the euro dollar, and as you can, we've talked about it already. It has been almost uninterrupted, except at this level here, downtrend of the euro dollar on the weekly chart, and now we have, for the first time in weeks, a pull up, but the pull up looks like a correction. That correction, if we look on the weekly chart, can go all the way to the trendragon trend line, and that would actually be the 50% retracement from the high from this move up. So quite a bit of a move for it to go up that high. That would be about 443 pips. So hopefully, well, hopefully it may not happen. It has to deal with this area of congestion here, which may not make it so easy to break. What we can maybe expect is for it to go um, at that level and maybe go to the 38% and get stopped out here. In any case, as far as the weekly chart is concerned, there is only one level down here, so we're going to put that here, and now we can look at the daily chart. Daily chart is about the same thing, so we can expect maybe a range between those two extreme here. The thing about the daily chart is that we have one low here, two second higher low, and potentially a third one right here, looking at this level to break. And if this level breaks, that would confirm that third low and will probably push the currency back up, and then maybe it will go to that level. So the trade setup are quite easy at that point. If you basically looking at this level here, you may want to be looking at a buy position right here. So I'm going to put it here in blue for buy. Okay, and we will be looking at reaching this level here, which you should actually do quite nicely, considering that this is a corrective move, or looks like being a corrective move. You can expect it to go at that level, but not very quickly, and probably have a lot of retracement. The best strategy would be for us to wait for it to break that level and retrace a little bit back to see that this level becomes a nice level of support before moving back up to that level here. And maybe looking at an entry at this level here, which will still give us about 200 pip to the upside. It would be better to go to the downside. And as I mentioned in my previous video, this level here is the level C of a correction from this move down here, and that means that actually this zone here could be a nice zone of resistance for the currency, meaning that the currency may go back here if it does, but actually go down and break that low here to resume the move in on the downside. This level here is quite a good level of support. If you look in the past, this level right here has been touched, was a congestion level here, congestion level here, and if it breaks that level down, the next level here would be here at 1.19 level, 1.9, 1.2, let's say 1.2 figure, which was done in 2012. It can still go there. There are a lot of issue in Europe they have to deal with, and maybe that's where it's going to be. Right now the currency is still on a downtrend. We can't really say that it's going into an uptrend. There may be a correction pattern unfolding right now, with this level here being I need to do this better, this here and this here and here could be a head and shoulder, which in this case The head would be here, the entry would be here, and if we look at the potential objective, let's say around here, that's 374. That will give us get us right to about that level of the red line here, which will be the 50% retracement on the weekly chart. So to look for, I believe that if the price breaks that blue line I've just drawn, it may actually go higher, and that level is 1.29 1.2908, so maybe looking at a 1.2910 or something like that. If that breaks, could be a good indication that the currency may actually go higher and retrace to those levels over there. Okay, so that's it for the euro dollar, and we'll go and talk about the British pound.